Thank you for joining me today. Today we are going to talk about disaster preparedness and recovery. I'd like to start by providing you some information about my organization. Money Management International is a full-service, nonprofit financial education and counseling organization with a mission to improve lives through financial education. MMI provides a variety of services to help clients manage their finances and achieve their goals. MMI provides education through workshops and online resources, including our free online learning program, learn.mmiuniversity.org. We also provide credit counseling in person, online, and by phone. During a counseling session, an MMI counselor will help assess your financial situation, develop a spending plan, set financial goals, and create an action plan. Through debt management plans, we work with creditors to help clients get completely out of debt as quickly as possible. MMI also provides foreclosure, reverse mortgage, home buying counseling, bankruptcy counseling, and education, student loan counseling, credit report review, and post-disaster recovery counseling. Visit moneymanagement.org to learn more or to schedule a counseling session today. You can also scan the QR code here on the screen. In this session, we'll be exploring resources to help you prepare your finances and manage the situation should disaster strike. We will discuss how to create financial readiness plan, essential records and documents to gather, steps to take to activate your financial readiness plan after an emergency, and strategies to recover strong after navigating through emergency situations. According to the Climate Central, the past 3 years have ranked the highest for annual number of billion-dollar disasters in the United States. Natural disasters often happen quickly and without warning, and it's important to know how to prepare for them. Creating a financial plan is critical. This includes asset readiness, an updated budget, and debt reduction plans, savings, adequate insurance, and cash on hand. The most important thing is to get started now. Too many people say they will get around to preparing for emergencies, savings, paying down debt, etc., but they never do. We may think about preparing for natural disasters at set times of the year, or when we hear about wildfires, hurricanes, or tornadoes. But what other kinds of emergencies should you prepare for? Of course, natural disasters, fires, tornado, floods, earthquakes, accidents like home damage, fire, water pipes breaking, vehicles, home repair of appliances, job loss, permanent or temporary. Remember, just earlier this year, many federal workers were put on furlough. Family emergencies, death in the family. There are so many emergencies you should prepare for. Studies show that 69% of Americans don't have enough savings to cover an unexpected expense of $1,000. You've taken the first steps by coming today to learn about the steps you can take. The most important thing you can do when you leave this workshop today is to start to take action steps towards building and implementing your emergency financial plan. Of course, there are other steps too, such as physical emergency preparedness, first aid kits, meal water prep, evacuation plans, family contact plans. FEMA.gov and Ready.gov are very great resources and have more information and checklists to help you. The first step is creating a financial readiness plan, is to assess where you are today and where you want to be. Take a moment to think to yourself, what sort of things do you think you should assess for emergency readiness? As you take a moment to reflect, here are some ideas for your checklist. Do you have a budget that includes emergency savings? How much money do we have saved? How much money do we need? Do we have the right insurance? Do we have household inventory? Do we have all identifications and copies of IDs in a safe place? Those may be just some of the questions that you ask yourself for your assessment checklist. So after you put together your readiness assessment checklist, now it's time to start going through the checklist, making changes where necessary, and building the emergency plan. You might not think that the place to start is your budget, but the budget is key to prioritizing the establishment of an emergency savings. When an emergency hits, you will have unbudgeted expenses. In natural disasters, this could include temporary shelter, hotels during an evacuation that might occur, meals away from home. With regular household emergencies like repairs, with other unexpected family emergencies, job loss, and other situations, emergency savings will be key to tide you over until you're back on your feet. Many people are faced with having to use credit during emergency situations because they don't have the adequate emergency savings. Sometimes that can be a problem if the consumer is already close to their spending limit on the cards, or they can't pay off the charges when the bill comes due. Then the consumer begins to accrue interest on those emergency expenses. So, assessing your budget now, and if your expenses are exceeding your income, you're likely to already be using credit to make up the difference. Part of assessing your situation is determining the steps you will take to commit to an emergency saving plan now rather than later. Let's look at some simple ways that you can start to adjust your budget and make room for emergency savings. When trying to build savings, it can be difficult to find that money. Most people live paycheck to paycheck, and a common phrase is that they have more month left at the end of their money. It's something we can all relate to. But the time is now to start making changes in order to find a way to save that emergency fund for the literal rainy day. Many people, when saving for a rainy day, are really talking about some sort of vague goal or a vague reason for savings. That's why it never happens. Goal setting is a big part of achieving an objective. Setting detailed, measurable goals will help you reach that goal. So, if you want to save $1,000 or $2,000 or even $3,000 for an emergency fund, decide when you want to have that goal achieved by 12 months, 6 months, 36 months. And then what you do is identify what it will take to get there. For example, having $2,000 in emergency savings by next year equates to committing to save about $167 a month. What are some strategies for creating a savings fund? Pay yourself first. It's important to make savings the first thing you do when you get paid instead of what's left at the end of the month. Use direct deposit. Create a dedicated savings account to have money from each paycheck go right into. Use tools such as apps to help you save. And use step-down spending techniques to reduce expenses on non-essentials. Let's take a quick look at the step-down spending technique. Again, it's important to remember that this isn't something that maybe you have to do forever. You're just needing to make these budget adjustments to help you work on paying down debt, not accruing new debt, or building up to $1,000 savings minimum. So take a moment, just kind of think to yourself and reflect on what sort of items that you can think of to use for step-down spending. For me, some things that come to mind are, of course, cable TV, clothing, hobbies, eating out, entertainment. Those types of things are something that are nice to have, but aren't necessities. So again, as we see here on the screen, we have the example of a movie and popcorn for two being $45. Well, you could look at just doing the movie for two at $20. You could look at adjusting the time to a matinee, so it's $12. You could look at renting a movie for $2, or even getting something from the library for $0. So this is an example of how you would do step-down spending. And you can apply this to, again, many items, including cable, clothing, hobbies, eating out, and then again, entertainment. So let's take a look here at debts now. So this guy has checked his credit card balance, and he's saying to himself, I can't afford an emergency savings account. I have all these bills to pay. but you can't afford to not have an emergency savings. Using credit to pay for emergencies can be very expensive, especially if you're looking at only paying the minimum monthly payment. And you may be wondering, well, really, how costly is it? It's thousands of dollars. Only paying that minimum payment can cost your family a lot. Now, if your debt is a barrier to savings or starting a savings, we do have a webinar, Put Your Debt on a Diet, that may be helpful for you. Also, if you need to talk to someone about your debt or getting on a debt management plan to pay down your debt, we have counselors that can assist you with that as well. And we'll make sure to provide that information at the end of the presentation. Now, let's take a look at insurance. Insurance protects your home and your family and your possessions. But most of the time, you don't know what insurance you have or really what it covers. You may be thinking to yourself that your homeowner's insurance policy will cover you in a natural disaster or other emergencies. That may not always be the case. So when considering insurance, there are some important things to know. So we're going to look more closely at homeowners insurance in a moment, but it's important to recognize that your homeowner policy likely does not cover flooding. This is any rising water, and it can be from things like rain, runoff, storm surge, or rising rivers. Flood insurance is purchased through an insurance company, but the National Flood Insurance Program is a federal program that offers flood insurance. So this QR code here on the screen, if you scan it, it will take you to their website. And it does take up to 30 days from the date of purchase for the policy to be active. And also some other storms, if there's active storms out in the Gulf or they may not be able to offer you the insurance until that storm has passed. So you want to be proactive and make sure you're not waiting until a storm is coming to obtain this type of insurance. If you are a renter, your landlord's insurance does not cover your belongings. Your renter's policy may cover flood damage or loss. So if you're a renter, renter's insurance is pretty inexpensive and can protect you from costly losses. Renters can and should buy flood insurance. If you are a renter, you can buy a policy from National Flood Insurance Program that can cover your contents up to $100,000. To find out more details of exactly what the policy would cover, or if you need additional insurance, you want to make sure you talk to them. And take steps now to get the proper coverage. And this type of insurance can be very inexpensive to get. It can be very costly if something does happen and you don't have it. So you may need special policy riders in certain areas, such as earthquake insurance, storm insurance. This is very common in places like the Gulf Coast, or there may be some other additional insurances that could be required in your area, mattering on common disasters. If you don't have copies of your insurance documents, make sure that you have at least access to them online or you have a hard copy of it printed out. If you don't have copies of your insurance documents, create an online account with your insurer to read the policy, including the fine print. If you don't want to access it or you're not able to print it, you can go ahead and call and ask for the policy to be mailed to you. Make sure to check your deductibles, coverage limits, and other key policy information. Time to review the policy with your agent annually. You want to make sure that you have adequate coverage. And sometimes you may be carrying more coverage than you need. So just making sure that you're appropriately covered. You also want to take a look at whether you're insured for cash value or replacement cost. While it may be cheaper to insure for cash value, remember that things depreciate over time. So if you need to buy new things, replacement costs will make sure that you're able to purchase a comparable item. Types of insurance are important for emergencies as well, such as car accidents, family health situations, unemployment, disability, or even deaths. So it's a good idea to review life, health, auto, homeowners, and any other types of insurance policies that you have yearly. Now let's take a closer look at homeowners insurance. Homeowners insurance helps protect your finances when your home or personal property is damaged by a covered event, such as a fire, storm, or theft. A standard homeowner's insurance policy typically includes coverage for the structure of your home, your personal belongings, liability protection if someone is injured on your property, and additional living expenses if you can't live in the home temporarily because of a covered event. If you have a covered event like a natural disaster, you'll likely need to file a claim to begin the process of being paid under your policy. When you file a claim, a review process starts. Your insurance company will evaluate the damage and assets covered based on the policy. During this process, you'll be communicating with your insurance company or a claims adjuster. You'll likely be asked information about what happened and documentation of the damage, so it's a good idea to take a picture and keep accurate records. After a major disaster, recovery can take time and often involves more than repairing physical damage to your home, particularly if injury occurs or items inside your home were also lost or damaged. Homeowners insurance plays an important role in disaster recovery by helping provide financial support to repair, rebuild, or replace what was lost in large-scale disasters, such as hurricanes, wildfires, or floods. Claims may take longer to process due to the volume of loss, and sometimes types of damage may require separate coverage depending on the policy. It's important to remember that while insurance is a key part of recovery, it may not cover every loss. So, understanding what your policy covers, what steps you should take, and what to expect can help you plan for things like temporary housing or other ongoing expenses if you have them. As we mentioned before, standard policies don't cover every type of disaster, so specialty insurance policies providing separate or additional coverage can and are designed to protect against specific high impact events like floods, fires, earthquakes, sinkholes, and windstorms. Of course, natural disasters and events like this can cause severe damage and loss that again may not be covered under that standard homeowners insurance policy and will likely result in more damage and financial loss than the average household is able to manage on their own. So, particular insurance policies for disasters, often referred to as catastrophic insurance or hazard insurance, may be required based on your risk, location, existing coverage, and other factors. Specific disaster insurance can help fill some gaps in the standard policy, particularly in many cases of natural disaster. Armed with better understanding of the different types of coverage available, options, you're better prepared to have a broad conversation with your insurance provider to discuss your options and be sure to have the right coverage for you, your family, and your home, in addition to your belonging and your finances. All of those will be protected against any inevitability. Finally, the widespread impact of recent fires make it especially important to focus on protections related to fire damage. It's important to note most standard homeowner insurance policies include coverage to help provide financial protection when a home or personal property is damaged by a fire. In fact, fire coverage is a key safeguard against one of the most common and costly types of property damage a homeowner may face. However, in some cases, additional specialized insurance may be needed to address higher risk situations, such as wildfire-prone areas or particular disaster-exposed areas. So be sure to talk to your provider about catastrophic or hazard insurance to be sure. Now, with proper insurance coverage firmly in place, the next step in your disaster readiness plan is to have cash on hand should an emergency occur. Let's take a closer look. Cash is an important safeguard and one we may overlook. Have cash on hand in your Go box. We'll explore what a go box is a little bit later in the presentation. ATM and debit cards may not work during a natural disaster. You may need cash on hand for other types of emergencies too. How much is the right amount? Well, that depends on the size of your family and your unique needs. But generally, it's a good idea to have at least $100 to $200 in cash. Keep it in varying amounts and keep some change on hand also. And don't be tempted to tap into this emergency cash if you're not actually in an emergency. Store it and forget it. Keep this cash secure and strictly use it for real emergencies. The next phase of emergency readiness is gathering your essential records and documents. How many of you have a full inventory and records of all household belongings, copies of identification, financial information, and have it all in a safe place and backed up off-site? Unfortunately, most of us do not. So let's talk through what we need in terms of essential records and documents. The thought of gathering all your important paperwork may feel daunting, but it's really important to get these things together in order and in one place before you need them. And you'll be glad you did. First, purchase a fireproof and waterproof safe to keep copies of essential documents. This is also a place to keep most of your emergency cash. Then purchase a portable fireproof or waterproof go box. If you don't have a go box, even a large 2-gallon Ziploc bag type of bag will work for you in a pinch. This will keep the documents dry, together, and all in one place. The idea of a go box is that you can grab it fast and carry it easily in an emergency. Keep extra copies of essential documents, flash drives, and some emergency cash in here as well. For storing original documents, a safety deposit box at a financial institution is ideal, but remember, in emergencies, these may not be accessible. Financial institutions may be closed or lack electricity, and you may not be able to reach them. This is why it's essential to keep hard copies with you. What sort of identifying documents should you keep secure and accessible in your go box? Driver's license, birth certificate, passport, military ID, social security card, immunization records, and any prescriptions essential to your health and essential health records. Don't forget about your furry household members, copies of pet ID tags, immunization records. These are also important to have. And you can see that list of items here on the screen. Some other items that you may want to keep in your lockbox for emergencies or your go bag would include insurance policy information, contact information for any of your major creditors, mortgage documents, contact information, military records, and bank account information. You may also want to consider keeping wills, guardianship documents, deeds, titles to any of your vehicles, tax documents, and business records. Technology makes it easy to inventory your belongings and to take pictures of your home before a disaster strikes or before something is damaged in an accident. You can help speed along any claims by having makes, models, serial numbers, and physical descriptions all documented. You can do this with your phone or camera. Take pictures of rooms, indoor and outdoor shots of your home, individual items, including those serial numbers and brands. Technology also makes it easy to store the documentation in a secure location. You can store data for free or for a small fee with services like Google Drive, Apple Cloud, Amazon, or other cloud storage companies. You can also have photos and scan documents stored on your laptop or removable hard drive to take with you in the event you have to evacuate. A USB or other external hard drive, updated periodically with inventory items, is another go box essential. Being prepared for any type of disaster also means working with your family to develop plans and letting any guest know too. Make a safety plan. Find out where are the safe areas in your home. For example, during a tornado, shelter in a room without any windows. Internal spaces like closets and pantries work very well. Just make sure you clear anything off the top shelf. Also, items falling down during a tornado can be dangerous. Have a communication plan so everyone knows how you will communicate important information in an emergency and who will contact whom. Next, prepare a survival bag or box with necessity items for you and your family to survive at least 3 days. This should include water, non-perishable foods, medication, important documents, pet items, as well as other important items. You should also have a mini kit for your car in case you are traveling and get stranded. So are you ready? If you have an emergency or a disaster, you should make sure to activate your plan after moving to safety, contact insurance companies and file claims, apply for aids, prioritize payments, and contact your creditors. When you file a claim with your insurance company, do it as soon as you can. Take photo of damage and file your claim online or via phone. This is why it is important to have your policy information with you and have contact information as well. Your home inventory information will be invaluable during this claims process. Photograph the damage. You may start removing items or making temporary repairs to make the home livable. But make sure you take photos before removing items, cleaning, throwing anything away, etc. File a FEMA claim after you've filed your insurance claim. FEMA provides disaster assistance in federally declared disaster areas and gives some individuals assistance that can be used to help with covering expenses. If you have flood insurance, homeowners insurance, renters insurance, etc., you may still be eligible for FEMA disaster benefits, so still make sure you apply. Also, if you need a loan to rebuild your home, the first step is a FEMA application. You'll need this on file before you can apply for low-interest loans through the Small Business Administration. Immediately file for federal financial assistance after a disaster. The following government organizations mobilize in response to natural disasters. They are the front line of support for those looking for financial assistance. You have FEMA, the Federal Emergency Management Agency, SBA, Small Business Association, and the FDA, Food and Drug Administration. Quickly submitting insurance claim and aid applications ensures that resources will be available as soon as possible, perhaps mitigating the risk of further financial impact and speeding up the recovery process. The federal and state governments may also have other disaster assistance available after a disaster, so you need to be ready to file for emergency food assistance or SNAP, unemployment if you're out of work, and other local programs. Find a case manager. Recovering from a natural disaster can be long and drawn-out process, but nobody has to go through it alone. Case managers are available to help with everything from finding food supplies to identifying reliable contractors. Case managers offer immediate and long-term guidance that make a confusing situation more clear, providing on-the-ground assistance to help people affected by natural disasters rebuild their lives as quickly as possible. Aid organizations like the American Red Cross provide volunteer case managers and other services to promote total recovery from catastrophic events. At the same time, there are dozens of religious organizations and nonprofits that offer free case management services as well. The recovery process is complicated. Get the support necessary to make the process as simple and effective as possible. You may find you cannot pay all your bills after an emergency, a disaster, a job loss, a family emergency, even if you've already done the first essential steps of setting up a balanced budget, creating emergency savings, and paying down debt. After a disaster occurs, it's normal for funds to be limited, even as financial obligations mount. Increased demands send housing prices soaring, building materials become more costly, and food supplies can be both hard to find or more expensive to buy. It's critical to prioritize payments to ensure that the most vital goods and services are acquired first. Distinguish between high and low priority payment obligations can maximize recovery opportunity while ensuring the necessities stay accessible. Non-negotiables like housing, transportation, food, insurance, and medical needs are a top priority, while other expenses may be flexible or be able to be put off until later. Meanwhile, minimize the amount of money going out the door by turning off automatic payments to low priority expenses and discontinuing utility services to homes that are inhabitable. Most importantly, timeliness matters. Take action as soon as possible to set the groundwork for achieving financial stability. Managing debt obligations can be incredibly challenging in the chaotic aftermath of a disaster or other emergency. Fortunately, many creditors are willing to make special arrangements for those impacted by catastrophic events. Creditors may offer ways to support disaster survivors, including pausing payment obligations for a limited time, enabling a lump sum repayment at a later time, issuing a loan modification to make monthly payments more affordable. To promote long-term historic financial stability, you can request that these changes not be negatively reflected in your credit report. Creditors are not required to accommodate this request, but if they agree, be sure to note the details of the conversation and set reminders to check your credit report every few months to verify. The most important thing is to ask for help when you are in a disaster or have an emergency. Even a non-natural disaster, creditors often have short-term hardship programs where they may reduce interest, waive fees, allow reduced payments. If your creditor won't work with you to create a viable path for managing your debt, don't stop trying to find a solution. You may be able to find relief by speaking with a certified credit counselor at MMI about concessions that creditors offer through our services. After an emergency, you can recover strong. All the planning and preparation you have already done will go a long way to the best recovery possible. There's a popular phrase, beast mode. This means putting all of your effort into working out, saving, or achieving whatever goal you have in mind. After an emergency, such as unemployment, a family emergency, accident, or natural disaster, you might need to go into financial beast mode as a family. That could mean selling assets, tapping into the gig economy, cutting expenses down to the absolute essential, filing for federal, state, or local benefits, even if you feel like you don't need to or don't want to take a handout. Getting proper mental health assistance for depression, shock, or PTSD, and making sure the whole family feels safe to talk about feelings and fears. You may also want to use EAP or Employee Assistance Program benefits during this time. That's what they're there for. Compassion fatigue and the emotional impact of financial stress after disaster is also something to be aware of to help protect yourselves and those you love. Disaster affects more than physical safety and property. They can also have a deep emotional impact. Sudden financial loss caused by home damage, displacement, or ongoing recovery costs can make an already stressful situation overwhelming. Uncertainty about finances, insurance outcomes, and recovery timelines often lead to feelings of anxiety, fear, helplessness, and a loss of control. Over time, the continued pressure of managing financial strain, navigating insurance claims, making rebuilding decisions, and adjusting to disrupted routines can result in emotional exhaustion. This stress may affect sleep, concentration, decision-making, and overall well-being. Even individuals who are typically resilient may feel drained as they balance recovery responsibility with everyday life. Compassion fatigue can also develop during disaster recovery, particularly when individuals are repeatedly exposed to their own stress or stress of others, which will commonly be associated with helping professions. Compassion fatigue can also affect disaster survivors, caregivers, and supporting families or community members. It may show up as emotional exhaustion, feeling overwhelmed, reduced ability to cope, or emotional numbness. Recognizing the connection between financial stress and emotional well-being is an important step in recovery. Understanding that these responses are common reactions to extraordinary circumstances can reduce self-blame and encourage individuals to seek support. Addressing financial recovery and emotional health together helps create a more balanced, sustainable path forward after a disaster. After a disaster, compassion fatigue can make it difficult to cope with ongoing stress and recovery demands. One of the most important steps is acknowledging what you're feeling, as emotional exhaustion and overwhelm are common responses to extraordinary circumstances. Setting gentle boundaries, such as limited exposure to distressing news or recognizing when you need a break from supporting others, can help protect your energy. Prioritizing basic self-care, including rest, nourishing foods, movement, and moments of calm, support both physical and emotional recovery. Staying connected with trusted people and accepting help when it's offered can reduce feelings of isolation. If the stress begins to feel unmanageable, seek professional or community support is a positive and productive step, not a sign of weakness, and can play an important role in long-term recovery. You also want to work to avoid scams. Dishonest dealers often flock to disaster areas looking to take advantage of urgent needs and the inevitable chaos that comes from a disaster. In this environment, contract scams, price gouging, phony credentials all come together to conspire to capitalize on the moment, making an already difficult situation even worse. It's critical that you know how to spot a scam and how to report bad actors before they make the recovery efforts even more difficult for you and your community. Ask for references, look at consumer reviews, and check with the Better Business Bureau to make sure that they are a good, viable, and sustainable safe option. Just when the sun is starting to shine again, literally and figuratively, those who would take advantage of victims start to arrive on the scene. How do you make sure aid is legitimate and not a scam? You want to make sure to examine credentials, weed out fraudulent contractors and those posing as government representatives. Remember that people who are offering genuine assistance will readily show their ID and credentials. Those without credentials are red flags. They may not be operating above board. In addition, FEMA advises people to be vigilant about spotting for fake credentials like FEMA certified contractor. The agency provides significant resources after a natural disaster, but they do not certify contractors. Nor do they provide contractors with victim names or personal information. Don't just let credentials speak for themselves. You need to know when and how much to pay. You should never pay for FEMA inspections, insurance adjustments, contractor bids. While the FEMA application itself will require information like your Social Security number and banking information, that data will never be solicited over the phone. Report suspected fraud. If you identify a scam or you think that you've encountered fraudulent contractors or other bad actors, make reporting a top priority. Check the FTC website and the FEMA rumor control page for current scams. You can also make a report at your state attorney general office. The Better Business Bureau also has online system where anyone can present a questionable business practice. Now, we have talked about a lot of ways on how to plan for your next emergency. An emergency financial readiness plan is not a one and done. You can't just go through the steps and put the plan on a shelf. It's important to consistently monitor the plan, make adjustments as your situation change. For example, a new baby, a divorce, a marriage, a death. Also, after you've had an emergency or even a near miss like Florida had recently with Dorian, it's time to start back at the beginning and assess your readiness for the next emergency. You might find that you need to replenish your emergency savings, review or take out new insurance policies, make a new budget to go with your new circumstances, get the family all on board through family meetings and goal setting. In other words, an emergency preparedness plan is an ongoing cycle. As you can see here, assess your readiness, create a financial plan, gather your documents, activate your plan when needed, and then, of course, do your very best to recover strong. In the beginning, we saw dark clouds as our background on the slide. Emergencies and disasters can be like dark clouds hanging over us, but with preparation and planning, the emergency will start to look more like blue skies again. Most importantly, no one has to navigate this landscape alone. If you are unsure about next steps after a natural disaster, there are services that are ready to help. You can contact Project Porchlight. 74% of those who experience a natural disaster indicate that at least one element of post-disaster financial coaching could have improved their financial picture. Now, that service is available for free through Project Porchlight. Now, what is Project Porchlight? It is a disaster recovery solution that helps survivors regain their financial footing. It's a one-year program that supports survivors as they overcome post-disaster financial challenges by providing step-by-step recovery plan, counseling, referrals, monthly check-in, aid application assistance. Project Porchlight is staffed by HUD-approved counselors who are specially trained to help people navigate the road to financial peace after a natural disaster. Natural disasters are undoubtedly destabilizing, causing chaos on many fronts. With the right help, it's possible to reestablish financial security after a natural disaster, an important benchmark on the path to restoring normalcy. You can go ahead and scan the QR code here on the screen to learn more about Project Porchlight. And if there are any questions or concerns, make sure to reach out to us or our counselors here at Money Management International. I'd like to go ahead and just review our disclaimer. Today's presentation is designed for educational purposes only and should not be considered as investment, tax, or legal advice. If you need investment, tax, or legal assistance, please consult a professional. You can also visit us and learn more about Money Management International by visiting moneymanagement.org or contacting us here at the phone number on the screen. And you can also go ahead and scan this QR code as well. Thank you so much for your attention today, and I hope you enjoy the rest of your day.